JB here, June 4th, 2024, 6/4/24. Hope everyone's doing outstanding. Gonna be really quick, 8:41 here on this fine morning. Quick rant, talk about the market, some of the names I'm in, some names I'm looking at, some updates, especially on the GLP-1 space. So first, take a look at the SPY, back-to-back sessions to the upside. So on the surface, it looks like a great market, strong rallies. Well, not strong rally. Yesterday was barely closing the green, but Friday we had a strong rally. But then you kind of pull back the onion, look under the surface, and it required some late day surges for the market to really finish in the green. So last Friday, all the way at 522 at 3:30, up to 527.50, and then yesterday we were at 525 or so, 525.60, and then we went all the way up to 527.79 close. Uh, I think that's you could take it as a good sign. Means buyers are there. They're looking for opportunities, especially into the close. And then you look at the candles, and I guess you can construe those candles as hammer candles, right? So it's a long, the long thin line, which means the lows, and then from the open to the close, it's very tight. So typically hammer candles happen on reversals, but I'll take it. So back-to-back hammer candles, and we held the 50-day still. So that's a good sign. So probably some churn. There's not much in the way of catalyst besides the jobs report on Friday. So probably some more chop here today and tomorrow. But it's funny as these markets, chop around started. We had a great May, up 5% for the S&P, and then we're into June, and everybody starts saying, "Oh, here we go. Here's a sell off," and then Market Watch always cues up these articles. Get ready for stocks to hit a wall this summer, says J.P. Morgan. Critical information for the U.S. trading. So it's funny these headlines. I posted in the watch list so you can read. It's actually a decent read. It doesn't make sense to just be 100% bullish or 100% bearish. You need to have some context to it, and there's definitely some data points in there. But I think Ryan Dietrich, who's one of my favorite follows on FinTwit, posted some stats on what the performance is for the markets when it's up over 11 or 12% for the first 5-6 months of the trading year, and it's like 87% of the time it's higher from that point. So historically speaking, we're in a good spot, but you never know. All right, so that's the markets. Also, one last good sign here, I think, is the yields. And even when the market was selling off yesterday, yields were going down. And you take a look at the TLT, it was 88.50 or so on Wednesday, and then just reversed. And yesterday, huge move, up 1.6%. That's a large move for the TLT. So if that does anything, it's kind of like a silver lining. It says, hey, yields are going down. That's a good thing. And maybe the market's going to start pricing in possibility of a couple more rate cuts. Who knows? ECB is going to cut rates at some point. Well, not at some points. They're going to cut rates this week. It'd be a surprise if they don't. So that's the first big major economy or block, whatever you want to call it, that's going to cut rates, and then it probably sets the stage for the U.S. All right, so let's get into individual names really quick. Structuretherapeutics GPCR, just a monster move yesterday. It was 50 in the pre-market, all the way down into the 40s, and then under 40, opened at 34.50, and then just took off. And I was looking at some 40s. I already had the June 55, so I didn't want to put more risk on. And then sure enough, it just kept going, and it almost moved to the point where I thought there was some other catalyst, M&A or some comments on the conference call regarding M&A, but that wasn't the case. And then there's some positive analyst commentary. One of the analysts were on CNBC I think it was Fast Money or something yesterday afternoon or evening, and they talk about GPCR. And they talk about the data and saying, wow, it's almost best in class. They think it's an M&A target. They think the adverse effects, which was a huge reason the stock sold off, because over 60, I think it's 62% of the cohort, the 62% of the people who took the trial had vomited, right? I mean, that's crazy. You know what I mean? And what a better way to lose weight than to vomit, right? So, like, does that skew the results? I mean, these are things I think about, but maybe analysts don't think about that. I'm like, if you vomit, what you eat, then obviously not digesting it. So does that skew the data for the weight loss? But conversations for other days. But he thinks that I think LLY had their oral data and they had huge adverse effects, which they actually, or maybe it was NVO, back in the fall, and they actually didn't release the specifics on the adverse effects. So that the analyst thinks that it's similar in regards to the AE, the adverse effects, that it's going to be solvable problem, and they think there's M&A on the table. So they after the close, GC Structure actually announced an offering 8 million shares. We'll see. There's no filing out yet. It's probably gonna be upsized. I think 1.2 million shares on top of that is available for being upsized. I bet you it goes for $60. But we'll have to see. Still have a couple of my June 55s. I may start looking for later dated strikes, 'cause I think this trades up near 70. If you look at the chart, the longer dated chart, 75 back in the middle of the fall before its big pullback right in December. So not saying it gets there, but it's I think it's $2.4 billion company. VKTX is 6.9 billion, I think. And I'm not saying apples to apples, but I think there's an opportunity there. So that's that's GPCR. VKTX came out with their NASH data this morning. And, I've been talking about this for a while because I don't think there's much, if any, valuation priced into VKTX on their NASH data. So it came out and it was better than expected. No adverse effects. You take a look at its comparison. And when I look at VKTX, the comparison for NASH would be MDGL, which is the first NASH drug that came to market this past year. And I think they're at a $6.2 billion valuation. Let's see what they are. $5.2 billion valuation. VKTX is $6.87 billion valuation. VKTX's data is better than Madrigal's data. The difference is MDGL has first to market advantage, pricing power, things like that. But to me, it's shocking that VKTX is not trading substantially higher than where before the data. So kind of frustrating, I guess. I'm not going to sit here and try and figure out why it's not trading higher. There's been arguments that because of the length of time to market, things like that, that's why it doesn't trade at any kind of premium. But I think it heads higher. Maybe today, tomorrow, so on and so forth. Still some June strikes that I locked in freebies. I'll look for other opportunities to play that one for upside. But I thought great data. All right, so really quick too. So we'll go into Dell. So disappointing. Dell all the way up to 140 after the open yesterday, and then just sold off again, testing that lower support line that I drew in there like 4 months ago. I talked about it, and this is the little clip. And if you go to the video, I'll see if I post in a chat room. But this was the conference call question that kind of put the the margins in the spotlight for Dell, right? Because if your biggest driver or next biggest driver for growth is an AI space, and Nvidia's touting you and things like that, and then all of a sudden you go on your earnings and you announce your earnings, and then in your filing it kind of shows that you did $1.7 billion in servers, but you had zero profit. So there those are legitimate questions. I think that's some of the reason why this stock is sold off. I talked about it Friday. I talked about it yesterday. But I think it's not 100% warranted, because I'm not saying not to look at these reports, but I'm like, they're not a non-for-profit organization, right? So if there's no profit to be made in that sector, they won't be in that sector, right? They're not going to say, hey, NVIDIA we'll make these servers, give us the chips, and we'll make no money on it. I just don't see how that's a possibility. So hopefully these names start to really HPQ and Dell start to go. Some reason my thinkorswim's not working right now, which is driving me nuts. But hopefully it's working right at the open. So that's Dell. HPQ, I mean, selling off again in sympathy with Dell, 3.2% to the downside. Still like that one. It's still inside candle, so it's hit 30, almost hit $40 after its earnings. Holds 34.50. I think that's a good sign there. Low was 34.84. C3 AI still in an uptrend, disappointing all the way up to 30.80 or so. 30.84 yesterday, then closed at 29.46. Still like that one for upside. Not much to add on that one. Spotify. So I think it goes to 325, if not higher, in this week. But the premiums were expensive, and I was looking at calls at the open, and I kind of passed, and it chopped around. I think it went down to 307 and change. Then at the end of the day, all the way up to 313.62. So definitely a name I'm going to be watching. I think it heads higher. Its earnings report should have been enough back in at the end of April to get it to 340, 350. And some reason it sold off, and now it's been chopping around. I think this is the next catalyst for upside. Rosenblatt came out with a buy rating, $396 price target this morning. Not that that I look at the analyst for 100% of where I think the stock is going, but it certainly should help. So don't be surprised if you see me at some spec calls. And then last but not least, Broadcom still, if the market finds weakness, they did find weakness yesterday, but it found some support. One of these days there won't be support. And Broadcom all the way to its 50-day moving average, 1332 is its 50. It closed under that, 1321. Not saying it's susceptible to go down to 1250 or so, but if there is market weakness, I'll definitely be looking for that one for some possible hedge plays. And that's it, folks. Let's have a great day. We have about 39 minutes to the open. Rock and roll.